Okay, welcome everybody to Enhancing the Accountant Bookkeeper Connection series, featuring KATA Accounting. I also want to start off by congratulating Jonathan on making the top 100 list. Again, this is
Thank you very much.
2 years in a row or 3?
Yep.
Or
2
two.
years.
Okay, I can remember if it was last year. So congratulations on that.
Thank you. Thank you very
Yes.
much.
All right. So I am Tanya Hilt, CPB and AIA, and I'm here because I am passionate about collaboration. And you can find me at Tanya's Bootcamp on Facebook, Twitter, Instagram, and a TikTok account. We are starting and trying in TikTok. I'm leaving that to my niece and daughter to figure out. They're the creative team, and so they're going to figure stuff like that out. But I think the first few TikToks are going to be focused around, I have to take a moment and share these. If you guys can see these cute little beagles. Rosie has had puppies, and here's one of them. They what was it? Somebody said they look like they just ate because they look stuffed. No pun intended. I think that was Bill Kennedy who said that. But anyway, these little beagles are going to be up for adoption at every conference that we go to. So look for these. We will be bringing some and leaving them. And there's going to be little instructions on what to do for social media and stuff like that. So look for us or look for some of these cute little things hiding around. Just had to share that out there. But I think we're going to do build up on the TikTok channel, build up to that, like Rosie playing with the puppies. And it might be this Rosie who is going to start coming to conferences with us. And maybe the real living, breathing Rosie. I don't know, but it's just going to depend. All the filming is going to happen this weekend. So it's just going to depend. Rosie might be in a diva moment. So she might or might not be too involved in it. Anyway, a little bit about me. I'm sure everybody knows I'm the Intuit Global Firm in the Future for 2018, named as Insightful Accountant Top 100 ProAdvisor 2018, 19, 20, 21, and 22, because that list just came out today. A founder of Cloud Business Services and Tanya's Bookkeepers Bootcamp, level 5 certified advisor through the Mentor Plus program, which is where I earned my AIA designation, which is Accredited Impactful Advisor, member of the Intuit Trainer Writer Network, and a director of CPB Canada. So yes, this is the same one we had from last time, but let's just say it bears repeating. Collaboration, the ultimate intertwining of skills, passions, and knowledge is what concocts the most shatterproof forms of change making. And this is so, so true. If you take a look at that, and what I love to do now that we've got a conference coming up, when I go to the conferences, I don't go as much for the sessions. I do try to make some sessions, but I really look forward to sitting down and meeting some of our colleagues and having that collaboration of the minds. And that really, I believe, does form change making. Jonathan, do you probably agree? Because that's where you met whoever you met first, whether Jenny or Tamitha, and then meet everybody from there.
Yeah, I mean, like it's the best part. It's funny you bring that up. I was just looking at the agenda for QB Connect for next week and just starting to look at, okay, what sessions do I want to go to and stuff. And I used to be that guy who I'd go to the conference and be like, I have to go to this, I have to go to this, I have to learn as much as I possibly can. And nowadays when I'm looking at it, it's like, that's useful. There's nothing in this time slot now. What do I do with this time? And hopefully there's going to have some kind of like a networking room where we can just hop off and just meet and chat with random people, like on the Hopin platform. I don't know what platform Intuit is using, but that's the one thing that I really am looking forward to, getting back to in-person conferences. I think CPB Ignite's going to be my first in-person, possibly my only in-person, despite QB Connect like global being in Vegas. I may only go to CPB. I haven't made the decision yet, but it's something that is on my mind.
Right now we're planning on it. COVID's going to change that. We're doing Scaling New Heights. 3 weeks from today, we're going to be down in Florida. It is. Yeah, it is. And we're taking a week off ahead of time, and we've got stuff for, there's an 80s party. So I happen to have my 80s stuff beside me. My I Love 80s t-shirt, my little
wow.
Yeah, I'm going with the total Madonna look. Total Madonna look. Because that's what I was really like. One of my looks in the 80s. Anyway, I'm so excited. But anyway, yeah, I'm really excited for that in-person conference. But I am going with a ton of PPE just to make sure, because the San Diego one, at last check, 50%. Approximately 50% ended up with COVID. Now, that doesn't mean that it was, bad COVID, which was good. It's getting weaker and weaker. And when I had COVID the last couple of weeks, I did take a full week off, and I was down for 26 hours hard with the fevers and everything. But the rest of it was just tired, and I just took the week off, and I just let my body wake up when I wanted to wake up. I slept when I wanted to sleep. I worked in between, but if I was tired, I walked away and I napped, and pretty much after 1 week, I was great. I bounced back completely.
That's good.
So that's just a little bit of advice out there for anybody. If you do get COVID, if you do that, hopefully you can bounce back quicker. And I'm high risk. I did not expect to bounce back as quickly as I did. I figured it would settle into my lungs, but because I was getting the sleep, I got on my puffers immediately, up to my essential oils, up to my vitamin C, my vitamin D. I was able to, again, a week, and I'm still coughing a little bit, but so there's something else you guys can learn today. So if you go and then take lots of PPE if you go to the in-person conferences. So I'll be the one covered in full PPE pretty much.
Hazmat suit.
Almost. And you know what? That actually could be an 80s look. Think back to,
Back to the Future.
Back to the Future. Exactly. I'll just have my plutonium with me. I have the DeLorean. We're good. Anyway, okay. Sorry, let's move on here. So you can tell I've spent the last few days high, right? And no, I promise. Okay, I'm gonna have to have Elizabeth cut that part out when we put it up. Anyway, so this webinar qualifies for CPD credits through CPB Canada. There will be 2 polls that must both be answered in order to qualify, and the recording of the webinar and your CPD credits will be emailed within 2 days. If you do not receive the email, it does come from Flowdesk, which is like a MailChimp, and that means that you have somehow marked us as spam, gone to the spam folder, or removed yourself from the email list, in which case just simply go back online. You can set yourself up. There's now a two-factor rule, I guess, or whatnot, process that you have to go through to be sure, and then let me know, and then I can resend it, or just reach out to me and I can give you the links to get yourself back in it. But I can't add you back in if you've somehow marked it as spam by accident. So just keep that in mind. If you don't receive your CPD credits in webinar, something's wrong, reach out. Okay. Oh, and here's that right there. So you can email us at bootcamp@mycbs.ca, or just go to the bookkeepersbootcamp.ca, subscribe here. It'll send you an email to confirm, and you do that. So there's that. Okay, so now we have Jonathan Carter, who is founder and principal accountant of KATA Accounting Solutions, cherished friend and my accountant as well. We've been collaborating with Jonathan and his team for a number of years, work with multiple mutual clients, work in QBO, has great attention to detail, and outstanding customer service. So I am going to stop and let Jonathan take it away.
Well, thank you very much. Let me just get my slideshow up here and share my screen. And what are we sharing? Okay, we're sharing the right thing, but we're on the wrong page. So, oh, we're way too far. Okay. So who am I? I'm Jonathan Carter, founder of KATA Accounting Solutions Professional Corporation. I was a member of the inaugural Intuit Accountants Council in Canada, and I have a very long-standing relationship with Intuit. We're big fans, but we don't like to just shout to the wind that everything is good when something is not working right. We like to help try and get it working better. Very excited about recent changes to work papers, and we're starting to lean into that more and use those more and more in our internal processes. So we're very excited about that. I was the recipient of the 2018 Inspire Accountant Award. I'm an elite ProAdvisor, QBO Advanced Certified, and very happy to make the Insightful Accountant 2021 and 2022 Top 100 ProAdvisor lists. At our firm, Everybody is working towards QBO Advanced certification. QBO Basic certification is a week 1 requirement. And yeah, that's the main platform we work in. Though as an accounting firm, we do work with other platforms. I'm a trusted advisor for several cloud bookkeeping firms. We have several as customers, and we really like working with them because we know we're getting a certain quality of file. The number of files that we've got from DIY customers who have just pooched everything, and it's a month of the deadline and they pretty much have to redo the entire year. It's really unfortunate, but it really speaks volumes about how valuable a good bookkeeper is. And that's my advice. We're actually considering just dropping that. DIY customers, like we'll have a look at the books and be like yes or no based on the state of the books. I am considered a thought leader in technology and accounting. I have to admit I have fallen behind a bit over the last 2 years. I'm not jumping on every new shiny tool, trying to kind of think of it in a broader sense. And I love working with technology companies. Most of our customers are in that consulting coaching space. So, our tagline is to communicate, collaborate, and innovate, because we think communication is the most important thing with your accounting team. So today's subject matter is a yawn, but it's something that I think is really important because it's something that I see so often there be delinquencies with and deficiencies with, to the point where, like, we had a customer a while back, we helped them transition and exit their business, and they couldn't complete it because the business had been dissolved because they had failed to do their annual corporate return with Corporations Canada for too many years in a row. So they had dissolved the business. Now, in the end, it wasn't so bad. It got reinstated really quickly. The transaction happened, and we're talking about, it was a low 8-figure number that was happening. So this was a lot of money to be held up from a $12 online filing fee that takes about 5 minutes to complete once a year. So seeing things like this happen, seeing other situations where it's like, there's no record. I'm going to use the quote now. If it wasn't written down, it didn't happen. And a lot of the times it wasn't written down. The number of times we start looking at a file and there's no clear owner of the business is really kind of astounding. So I thought it was really important to talk about this subject matter. I would like people to chime in. If there's anything that I say, oh, hello, my chat's right in the middle. If there's anything that I say that, like, oh, you feel like you should expand on or add to, by all means, please chime in and add on. When I started digging into this, I really had to scale back on what I was going to talk about because there's too much. This is completely for the Canadian audience. I am not speaking about Quebec at all. I do not have the experience or the knowledge to speak about Quebec, and I don't speak French. So that's kind of a big problem if you're going to deal with Revenue Quebec. Anyway, on with it. Just some, our agenda for today, just the tax, that's what we always think of. The corporate record book, covenants and other requirements. I'll get more into this later. Events that trigger requirements. Provincial corporations, federal corporations, a couple of easy value adds that you can like upsell your customers with. Oh, we can help with this and help keep them compliant and keep them on side. So, and then of course, QA and discussion. So let's go to the first polling question. Which of the following is a corporate reporting requirement? T2, corporate tax return, GST, HST, PST filing, a provincial information return, a director's register, or all of the above?
And just a reminder that you do have to answer both poll questions in order to qualify for the CPD. Okay, so we'll give 5 more seconds. 4, 3, 2, 1. End the poll and share the results.
Yeah, so the answer is all of the above. All of these are required. Some of them don't necessarily get submitted on a regular basis, but they need to be updated on at least an annual basis. The rare exemption would be is if there's no sales tax requirement. That is possible in some businesses that we've seen. So, all right, so just the tax. As bookkeepers and accountants, we tend to think of just the tax, the GST, HST, and sales tax returns, the PST returns, doing the T4s, T4As, T5s, T5018s, those different kinds of things that go to employees or contractors or owners. Of course, the corporate tax returns and excise tax returns. Now, excise tax returns, I know not everybody deals with them, I'm sure, but they are something that might enter your wheelhouse. They're really not that hard to deal with, but it's just something that we've seen come up a few times. Now, where we find the biggest deficiency, where we most frequently see a problem, is in the corporate record book. So this is a legal requirement. You have to have it. If you're a one-person corporation, you still have to have it. Should be really easy to come to agreement with yourself. So it should be really easy to update. It needs to be done. There are potential fines for not keeping the records up to date. I believe the fine is up to $25,000 federally. I don't know what the provincials are for each different province is going to have its own different requirement and potential fine. There could, if you don't keep it up to date and if you don't record key things, transfer of funds from the corporation to the shareholders might be identified as an unfavorable tax treatment by CRA if it wasn't clearly outlined in what happened. It's often something that gets looked at in due diligence for financing, be that lenders, be that investors, for grants, and it can result in lawsuits. One of the biggest problems we saw, same company that got dissolved, was they had no shareholder agreements in place. So there was two shareholders, 50-50. It was on the shareholder register, shareholder ledger. Everything was recorded there, but there's no agreements. So when it came time to actually exit the business, it became an ordeal. And unfortunately, in this case, it did erode value for the shareholders. And if the approach had been different, they probably could have gotten another, I would guess, $2 to $4 million on their exit. But unfortunately, because things were not well kept up in a lot of ways, it really damaged when the purchaser reviewed the book, the corporate record book, and found that was largely deficient. It really created a lot of downward pressure on the price. So just to let you know where some of this information is coming from is from Industry Canada. We also network with some lawyers. We've had the guys from Quantum and Sheldon Group on here before. We also, work with CPA Solutions and their tax law firm from time to time. There's a few others out there, but this list that I'm going to go over is definitely not exhaustive. It's just kind of like a starting point. I feel like I'm beating this one to death because we have talked about this. I think this is the third time we've talked about this in the last 12 months, but I think this is an area where, as accounting professionals, we can add a lot of value with very little effort. So just some of the examples, the elements of a corporate record book, the articles of incorporation or articles of amendment, the bylaws and amendments to the bylaws, unanimous shareholder agreements, meeting minutes of shareholders or of the board, and of course the resolutions, the formal notices. So like, you move, that might require something. Change of address, change of directors, things like that, the directors register, and of course, who actually owns the company and how much did they have? That would be your shareholder register and shareholder ledger, or securities register, sometimes referred to as. And of course, key agreements. Those could be the agreements that are vital to the operations of the business. Could be things like a lease agreement, a shareholder loan agreement between the corporation and an individual shareholder, different kinds of situations along those lines. So This is another area where we find people are getting caught off guard. When you enter into an agreement with another party, there can be covenants required in order for you to qualify for that funding or that investment or that grant, whatever it might be. And what we found is sometimes people are getting into these things quickly and they don't understand what's required. And they're like, oh, this is what we need. But they don't understand that, there has been an impact from a covenant from some other agreement. So these are standards that the business has to meet. And it can have really bad consequences if you don't meet the requirements, if you don't handle the covenants properly. So some of the things that we've seen, bank loans, I think everybody here is dealing with a customer who has a CETA loan, right? So that's something to keep in mind, because every financial institution, they were all different, all the different agreements from the different financial institutions. So they're one daycare customer, their legacy customer. We've been working with them since my second year in business. When I would take anybody who walked in the door, and they've actually turned out to be an amazing customer. But they get government funding, and as a result, they need to have an audit every year. And some of these things, they don't necessarily line up in the way we'd like them to, and it can add increased pressure on yourself, increased pressure on the business owner. And if you're working with an auditor, increased pressure on the auditor. To be clear, we don't do audits, but this is a regular monthly bookkeeping customer who we work with very closely, and we do pretty much everything but the audit. And then our work gets audited by an independent auditor. So one of the things you can really help your customer with is reviewing these kind of agreements before they sign them. So let's get into some of the things that can happen. So we talked about the audited financials. We did have another customer who came back to us, and they had a grant from a well-known organization, and no issue with the grant or their application or anything like that, but we need to have audited or reviewed financial statements for this year and last year, the periods covering the grant. And of course, this is after we've done all the work for the prior year. So when you get an audit, there could be an adjustment that could require an amendment to the T2, added cost, added inconvenience for the business owner, things like that, something to keep in mind. Also, you need to budget for it. So if you're going to get a $10,000 grant that requires you to get audited financial statements, it's probably not worth accepting the grant, because all that money is going to have to go to paying for the audit. Now, audits typically, the lowest, we work with somebody who's very affordable, and it's still like $8,000 every year. And I have rarely seen audit invoices come in at under $10,000 a year. So it's something to keep in mind when you're reviewing any agreement for a customer.
Can I just actually bring something up at this point?
Absolutely.
Okay, so there is, and you're absolutely right with that. The audits can get quite expensive. There is an app that I've done a fireside chat with. I spoke to them several years ago, but I didn't really understand it. They are coming out for the States and for Canada, and it is stamped.ai. Anybody who knows Kinga Jesek, Kinga is there right now. They are, and they actually might be able to help in this situation. And so they are an outsourced CPA firm. They are 100% in Canada. So they're using Canadian CPAs physically on Canada. Other than the agreement with the client that the client signs off, they deal with you. So they're not necessarily dealing with the client, and their starting price for audits are $8,500. And they actually do bring it down a little bit because they know that they're dealing with, accounting firms and, or bookkeepers or whatever that have, you've already gone through the books and they're really good books. So they're able to bring it down a little bit. And so, for example, instead of you potentially using this other person, or maybe this other person is full, here's another way that you can do it. It's a little bit less so that you can charge more. You can basically upcharge, do a little bit of a markup for the work that you are now spending working with that, accountant doing the audit. So
that is something to keep in mind. Like, you're going to have extra work. So if the customer's getting an audit, you need to either build that extra work into your subscription, or you need to be able to bill them for it afterwards. So that's a really good point too.
Exactly. And the one thing that I do like about the conversation with Stamped that I think is, really good from it, because I was sitting there when we did the fireside chat, I was trying to look at it from all avenues. I'm trying to look at it going, okay, so, some bookkeepers that don't have good accountants that they can, source out to, or if it's really busy, their turnaround time is like about 2 weeks on a straightforward one, unless it's during busy tax time. So again, if you're behind the ball, there's an accountant busy, or you don't feel comfortable, because there are a lot of accountants that have started bookkeeping services, and we all know that there are those accountants out there that do not have the same ethics that Jonathan has. I know Jonathan is not going to try to have conversations, with clients about the bookkeeping. There are others, because there's nothing in the FCPA ethics that says they can't take business from a bookkeeper. So I do know in conversations with bookkeepers, some are very uncomfortable with that. But then we also hit the other side, and I said, okay, so how is it that you don't want to now have Stamped AI become a threat to the accountants? And that was when we talked about is it's great again for that overflow. Let's say, you're not making as much money as you would have, in your business hiring somebody necessarily, but what if you don't have enough to hire a full-time person? You just need to do a little bit of outsourcing. They're great for that. Or like, yourself, Jonathan, where you don't do the audits, outsource that portion of it. And now you're working with them directly, and because they consider you the client, like I say, other than the engagement that our client signs, they're now working more with you, which, will make that process a little bit easier because that file. So just thought I'd bring that up, that is an option if somebody doesn't have somebody to go to, or through yourself for that audit piece, that there's other options out there that are available. And I know they will be at CPB and Scaling New Heights if anybody's interested. I haven't used them yet. It's absolutely an option, but I know some people really like the fact that, again, they're coming out and they're helping both bookkeepers and accountants. So they're not alienating the accountants as well too, if you use it, again, to your advantage, right? So just thought I'd throw that in.
Interesting. I'm definitely going to be talking to them, because it's very interesting. One of the biggest challenges of having a registered accounting firm with CPA Ontario is dealing with CPA Ontario. So for instance, because we're not a licensed public accounting firm, AKA we cannot do audits, we cannot do reviews, we can't hire a subcontractor to do it. It has to be an independent engagement. And we do act as a go-between. The customer always gets asked some questions as well directly. They can never be completely hands-off. But it's a really good it's worked really well for us. But you're right. Like, I mean, one of the things, and it feeds nicely into the next bullet, which is the atypical reporting deadlines. Everything's due at the same freaking time.
Exactly.
And it's really not well planned out.
Right. And if you guys are backlogged, again, here's another option where the prices are down enough that you could easily put in, a 10% markup to account for that. And so that, if you're like, we can't do it, but you don't want to turn the business away. Again, they are an independent. We did talk about that in the fireside chat about the CPA rules and whatnot, and how the engagements and everything work. But again, they prefer to deal with the accountant or the bookkeeper. So should look at the fireside chat. But yeah, King is there. Reach out to them, and that fireside chat is, I'll make sure to post it. I'll make sure to post it somewhere, and I'll maybe send that out with here. But I would, for you, Jonathan, take a look into it, because again, if you get really busy and you're like, I can't make the deadlines because whatever, the bookkeepers didn't get stuff to you, the clients, whatever, you know what it's like. You're dealing with all of that. You've got your staff really full. So you either don't hit those deadlines, you start working more hours, or you hire somebody, but now you need to train them. And again, maybe you don't have enough to hire a full-time person. So here's an option in between. So,
it's definitely something I'm going to be looking into more. I've seen her on Twitter a bit about it, but I thought it was an AI company. I didn't actually know that it was dealing with assurance engagements. And I'm very
It's
curious to learn more about that.
Yeah, I would. I'll make sure that you've got that fireside chat to go in and take a look at it. And I've spoken with Simon a few times,
Ah,
and it is interesting.
it's on your YouTube channel, right? I'm
I
subscribed.
don't know. They did it, so it wasn't me
Oh,
that did it. So it's not on there, but I will
oh,
make
so
sure
it'll be
to
on the
share it out.
stamp.ai fireside chat.
Yeah, I do
Okay.
believe it's on theirs.
Okay, I'll
But
Google it.
but yeah, absolutely something to look into. And again, like if you don't look at them, if you look at them, how that they're not looking to compete, they're not looking to take over the accountants, because there's a lot of stuff that you're going to get from when working with yourself, Jonathan. That under a slightly different type of engagement that they do things, that there are some different things that you're going to get from that. But again, it's nice to have these options as you're growing your firm. So, but yeah, no, look
It's
into that.
nice to know that that option is out there, because I mean, if you're going to go to a mid or a large firm like a Grant Thornton or an MNP or KPMG or something, I mean, you're guaranteeing
Oh yeah.
a low 5-figure bill at the very lowest. So, it's nice to know that those options are available for the smaller businesses who can't absorb that kind of an expense,
Yeah.
or
Yeah,
it's a hardship.
absolutely. Absolutely. And that's exactly, because what is the biggest thing? Again, you've got to hire staff, but maybe you can't find the qualified staff. Or again, you're like, well, I have to hire somebody, but I don't have enough. I might be able to do, again, half a person. So you're paying for a full-time person when you don't really need them yet. So again, it's just nice. You're right. It's just nice to have these extra options in the meantime that can help you grow however it is, to be able to
Yeah.
come in and not be in competition. So okay, I thought that's a perfect time to bring that up, just when we were talking about the audit prices, and because I know, yeah, they do the audits as well, and we talked a little bit about that in the fireside chat. Anyway,
It's
I
a
will
lot
shut
more
up.
as with everything, the price is just a part of it, right? There are minimum standards that are required for an audit.
Yep.
And I've seen, anyone knows, if you work with a big 5 firm, you're getting a CPA student doing your audit, and they're being overseen by an audit manager who's being overseen by a partner. So you're paying a very high rate for a very inexperienced individual who's actually doing the groundwork, or team of individuals who are all billing out at a very high rate. And sometimes they're going way beyond what needs to be done with regards to the audit. And I know everyone gets frustrated with sometimes getting asked the same question more than once or in different ways. And it is actually part of the process to see if you get different answers when you ask the same question to different people, or ask the same question in different ways. It is part of their process. So I mean, it can't be avoided, but like, yeah, it's interesting. Like, you pay a high price tag, but you're getting really low quality, but it's packaged up really nicely when you're working with a big 5. It's interesting. It's very interesting.
Yeah, and I think stamped works a little differently, but where the AI comes from is that everything, they've got their own unique, almost like working papers in there. So they're not, so I didn't see the details, but you use their software to kind of upload everything. And so now you have, it's consistent for every single client, the processes and everything is consistent, and you can kind of go in and see almost what stage it's at, I believe, and see the notes. And yeah, and I don't believe they're CPA students that they have. I'm not sure on that anyway.
I mean, if they're outsourcing to licensed public accounting firms, who knows who they have on staff?
No, they're actually,
what kind of firm
they're
is
all stamped. They're all stamped.ai employees.
Oh, so Stamped is a licensed public accounting firm.
They are, yeah, they are
Interesting.
the accounting firm. Yeah, so they are the accounting firm. They are currently in Quebec, and every single person that they have working with them right now is on Canadian soil, has their CPA designation. They are changing. Simon has now got his US license, but he doesn't have a lot of people with the US license now. And so I'm not sure, again, if he's going to be opening a US office to take care of that part of it. But I do know that they'll be at Scaling New Heights, ready to launch their US division. So I don't know the details around that, because don't deal with the US, so I didn't ask a lot of US questions, and they weren't ready to really answer that time. But yeah, I'd love to talk with you on it, Jonathan, after you look into it and just hear your take on it. So be very interesting.
Let's do it.
Anyway, all right. I'm going to stop talking.
Let's circle back to the atypical reporting deadlines and everything being due in the same 2 months. Anybody who does tax knows this happens every year. And I mean, it's no different for assurance engagements, for the auditors, for the reviewers. And quite often they might not line up. So for instance, we have one customer, December 31st year end, their taxes are due on June 30th. But because of the atypical reporting deadline, we have to have the draft tax return to the auditors by the 31st of March. So that means you have to tighten up your processes and be more on top of things, or else it could risk funding sources. It could cause delays in funding. It could cause removal of funding, loss of funding, things like that. So it's very important to keep track of those things, particularly when it comes to provincial governments and federal governments. They're not, mostly it's provincial, but they're not paying attention to fiscal year ends. They don't really care, what the situation is with the business. They just, here's what it is. And quite often, as we know, the government really thinks about how businesses work before implementing something like this. So sometimes it can be quite a challenge. Another thing we've seen some problems with is maintaining financial ratios. And having a good corporate record book with these kind of agreements in place, better yet, like an executive summary of like, if there's something important there, can drastically affect the advice the accountant gives. The example that I'm thinking of was one that required a specific level of current ratio. And we had no idea that the customer was required to do this. We had no idea, like we knew there was a loan on the books. We knew they had a loan agreement, but they couldn't find it and whatever. And it's simple and whatever. Well, luckily they had a good relationship with the bank, because one of the things we helped them do was get money out of their corporation into their hands, which is a positive thing, really, when you think about it. But by doing so, they moved them on the bad side of the financial ratio line. So what the bank wanted to do in the end was they wanted to see the financial ratio over the subsequent 6 months. I think we got it to them after like 4 months, and after year end, and they saw that the financial ratio was back up to where it should be within 2 months, so they were okay with it. But if that customer didn't have that relationship with the bank could call the loan, and all of a sudden the customer has to come up with alternative financing to repay the bank, or has to inject their own money to repay the bank. Regardless, keeping an eye on those key financial ratios is very important, and those weird atypical deadlines. There could also be restrictions on the kind of activities that can be conducted, or maintaining a specific set of activities, which can create restriction to the business, kind of handcuff it to behaving in a certain manner. So these are some things that are really important to watch out for when you see these agreements. Hopefully you're seeing them before they're signed, but even if you see them after the fact, then it's important to bring up. One random thing that we encountered with a startup we've been working with for a few years, very excited about where they're going, and hopefully we'll see something big from them this year. But in just a simple general, I can't remember the name of the agreement, but it was a credit card agreement. And it was a low credit card. It was like $5,000 credit limit. And it gave the bank first position on all the assets, including the patents and intellectual property of the company. Well, when you're trying to attract investors to a startup, the IP is the company. That's where the value is. So if the bank has first position to that for a tiny amount of potential debt, it's kind of ridiculous. Now, what that customer ended up having to do was cancel that credit card, get a credit card from a different company, and make sure that that clause was not included there. So it could be something as simple as a credit card agreement that could get in the way of something like, in this case, it was $2.1 million of convertible bonds. So something to keep in mind. So provincial corporations, I'm just going to be very general about this. in Ontario, we wrote a blog post about it. It has had the more traction than any blog post we've ever done about dealing with the Ontario Business Registry. Things have changed. You used to be able to file the provincial return, the information return with the T2. That ended last year and now has to be done independently. It's a real pain in the butt to get set up. But once it's set up, it's actually very, very convenient to use, because through the Ontario Business Registry, you can do all your change of address, change of directors, everything right on there, your information return, everything right there. So that makes it actually quite easy to do. Generally speaking, they give about a 2-year grace period before they move to dissolve the corporation, but they will dissolve your corporation if you don't file those. So it's something to keep in mind. Also, if the customer moves, that's something that you might have to deal with different provincial corporate or different provincial authorities. So we had customers this year who moved from Ontario to New Brunswick. Sorry, last year, who moved from Ontario to New Brunswick. So they had to emigrate from Ontario and immigrate their corporations to New Brunswick. So that was an interesting one. And of course, if you're opening offices in different provinces, or if you have a customer who's doing so, there may be extra provincial registrations required. And let's just say, when you're speaking with government authorities, you're not always getting the best advice about what you need to do. So sometimes it's worth seeking a second opinion. We're dealing with a customer right now who has registered their corporation in Quebec. We don't do Quebec stuff. We told them we don't do Quebec stuff, but they did that based on the advice from somebody from like another department. It was like, oh, you have to have it registered in Quebec. They have no brick and mortar in Quebec. They have no reason to be registered in Quebec, except for the advice of this government person that they spoke with. And in retrospect, in investigation, we don't think it was even appropriate to do. So that's something that we have to unravel. This is the exact information return, the federal corporation, the annual corporate return. This is the exact situation that got that one company dissolved when they were trying to exit. It's really easy. It takes 5 minutes to complete. We always get this flipped to us from a customer. Hey, kid, I thought you filed our corporate tax. It's like, this is a corporate return. This is not a corporate tax return. This is a different thing. Click the link, follow the instructions, and it's hilarious. Like, I'll get this from a customer and they'll be like, how do I complete this? It's like, did you try clicking the link? And then they'll write back and be like, my God, that was easy. It's like, yeah, it really can be. One of the things they ask on this is, when was your last meeting? When was your last shareholders meeting? So that means you have to report when you had the shareholders meeting, which means you have to have a meeting, which means you have to update your minute book. So this is one of the things that you have to do to keep your corporation up to date, and one of the reasons to keep a good corporate record book. So easy value add. Let's create a corporate record book. Really, really simple to do. What we do is we have a folder called key documents. We get them to upload all the stuff that they can, and then we just put the things in there that would be part of a corporate record book. So hopefully we can get a completeness of it. Generally speaking, we don't. We do find that there's a lot of small corporations that have no bylaws, and we're not lawyers. We should not be writing bylaws, but there are templates out there available, and the directors can write those up and customize them to their situation. But updating the minutes, those kind of things, like, it's good to have all this proof there. You never know when there's going to be a problem, when something's going to have to be looked at. Do you really want to go digging into a filing cabinet or a banker's box to try and find this stuff? I would suggest that if you're going to do something like this, create a checklist. We all love checklists. Record what needs to be there. Make sure that it is there. Charge a premium for this. I mean, no, it doesn't have to be a huge amount, but charge for this because you're adding value. For the checklist, what I would include is what is required, who it's required by, when it's due by, and who's responsible for completing it. And I would get those things updated on a regular basis, at least annually. It's probably a pretty good idea to look at this more than annually, because sometimes you can have wonky deadlines, atypical deadlines, as we discussed. So, all right. So some important considerations to keep in mind: severe consequences from not keeping up on corporate reporting, dissolving the corporation, unintended and painful tax consequences, immediate call for a loan to be repaid from a lender, loss of funding, loss of grants, fines, lawsuits, legal disputes, and of course, increased legal fees. The customer is going to look to blame someone else. I think most of us have had that experience. And we have to be very clear in our communication who's responsible for maintaining compliance. This really, for us, has come out of the DIY bookkeepers or DIY bookkeeping from customers when they do their own bookkeeping. It's like, well, I thought you reviewed everything and made sure it was all correct. It's like, it's very specific in our engagement letter. It said many times, we will not audit or review the information you provided us. We do have a look and let them know if there's a problem and give them the opportunity to fix it. But if you can make sure that they know who is responsible for when, you have those key reminders in your calendar, things like that, this process can be relatively smooth, and it makes you look like a diamond. It makes you look so amazing because you're ahead of the game. It's like, hey, I noticed that you guys moved. Have you filed this? I noticed that so-and-so left the company. Have they resigned as a director? Have you appointed a new director? Did they sell their shares? Do we need to update the shareholder register? And this stuff is really not complicated. It can be done with a lawyer for a big bill, but it doesn't need to be. The owners, the directors, they can maintain their own records. It's completely acceptable. So let's get to the last question. There is no all of the above this time. So what of the following is not a corporate reporting requirement? Submitting T4s, adherence to bank covenants, getting an audit, a shareholders register, or extra provincial registration. This one is a bit tricky. It is a little bit of a trick question.
All right, so just a reminder that we do need both polls answered, and they don't have to be the right answers. They just have to be answered to qualify for your CPD. So we will just give a bit of a countdown now. So 5, 4, 3, 2, 1, and the poll and sharing results.
Yay! Getting an audit is correct. Getting an audit is correct. An organization can elect to get an audit, and it is not a requirement of any kind of reporting. That is a possibility. Extra provincial registration, I could see that. Like, not everyone needs to do extra provincial registration. So that's definitely something that could apply. Just back to the quote. This is the proper quote. If it was not written down, if it is not written down, it doesn't exist. So just keep that in mind. When you're onboarding a customer as a corporation, ask them to see the shareholder register, the shareholder ledger, their corporate record book. And if they don't have it, there's an opportunity there. There's an opportunity for you to shine and show your knowledge that, hey, you guys need this, and here's a checklist. Let's go through it. Who's going to help you with these things? Because how do you prove if something happens to the shareholder? How do you prove they own it if there's no corporate record book? Who is entitled to this money if there is no corporate record book? These kind of things can create massive problems. And then what happens to the money? What happens to the employees? What happens to the liabilities, responsibilities of the organization? So remember, if it's not written down, it doesn't exist. Thanks, everyone. Questions, comments. I'm very eager to see if anybody has anything else that they think very strongly I missed, because there's definitely a lot more out there with regards to corporate reporting requirements. And as always, I'd love to connect. Here's all my info. Happy to connect with anybody. So, Tanya, how about you? Do you find that you ever have situations where it's like you get caught off guard by a reporting requirement that a customer may have?
I'm sure I'm sure we have, and I'm sure that the reason was we didn't ask the right questions in the first place to get a full understanding of what those requirements were. This is one good reason why if you're unfamiliar with the industry, don't do it. That's all I have to say. If you're unfamiliar, just don't do it. You know, if you've never worked on construction and don't know what a T, 5018 is in the requirements, stay away from it. Just, because you are going to end up, taking it on, thinking it's great. Like, Sherry Lee Mather, she works in, winery, craft brewery. They've got a whole bunch of other stuff. If you deal with gas stations or variety stores, they are
anywhere that sells cigarettes.
Exactly. There's lottery. There's because we have one, but thankfully they're a DIY. So we just do some consulting for them, but the owner knows this stuff. If the owner didn't, But so that's just the biggest thing I can say. If you don't know the industry, don't think, oh, hey, it's simple. It's easy. I can get into it. Do your research first.
You'll probably find that you can. You can.
It's
just, you can probably find someone to teach you.
Knowledge is power.
It's learning.
And know that.
Yeah, exactly.
Because you don't want to find out afterwards that you dropped the ball and the client has to pay penalties because they assumed you knew and you assumed there was nothing else.
Yeah.
Now we're our enemy, right? We know what it spells.
Another good way to protect yourself is to make very, very clear your responsibilities in the engagement letter. So for instance, we do work with a company that imports ethanol as part of a process that they use in manufacturing, and there's excise reporting required for that. It is not covered by our engagement letter. We did learn about it. We were ready to execute on it. And they're like, you know what? Like we should have the person who manages our raw materials, we should have them doing it because they're right involved. So we help them design a process, a little bit of extra consulting bonus revenue. But in the end, then now the customer can handle that part of it. The customer is responsible for that. So that's a nice, easy one. Wow, I thought for sure there would be some questions about this. Just a quick informal poll. Has everybody here who has a corporation already filed their corporate information return?
Has my accountant done it? I don't know. You tell me, Mr. Accountant.
We sent you the email about it.
Did you? I didn't get an email. I responded to all your emails.
Oh, wait, no, yours was not required. You were in the exempt period. So there was year ends. There was year ends. I can't remember the exact dates. I think it was March 31st to November 30th, 2021 that were exempt. The system came into place October 14th, I think it was. I could be confusing with CRSRS 4200. But there were a lot of people who were exempt, but December 31st year ends, you're not exempt. So you need to hop on there.
Yeah, we were in August 31st year end. So yeah, that makes sense. It probably exempt for this year then, which is great.
It's interesting, that particular setup for Ontario, because we can do it as an accounting firm, but we got some hoops we have to jump through, and it's a longer process. Like if the customer does it, it's done in like 15 minutes. But if we do it, then there's a delay between when we start it and when it's actually considered complete. So we did not want to take that on during tax season. So we just, here guys, go do it. Here's our blog about how to do it. Go do it. And
I would say if you give me the link and stuff, yeah, I have no problem doing that as long as I have instructions, if it's easier. So but again, this is really good to know that I didn't know about that as the business owner. That was new. And that came up with the conversation between you and I. And that just shows where it's so important that you need to know those reporting requirements for whatever industry you're getting into. You need to know those because the business owner just might not know those.
Yeah, that Ontario Business Registry, it's interesting because it's any corporation in Ontario, period.
Right. It used to be part of the T2, you were saying, right? And then they pulled it out. So again, I had no idea. I didn't keep up with that. I just know my accountant takes care of stuff.
And that's something that we had to be very clear on, which is why we have that canned email that went out. And it's like, hey, this is no longer part of the T2 process. This was not our change. This was brought in by the Ontario government. This is what you need to do. Here's a link to the blog. Follow the instructions. You should be fine. Call us if you have questions, kind of thing.
So is that something that you will be sending out to clients as they put their T2s in? Or is that something, okay, because I was going to say, because if you're going to remind me, then that's great. If not, I'm going to create the task to remind me every year and not put that on.
No, our automated email is part of our workflow now. It goes out during the review process. Like when the file comes to me and I'm overlooking it before I send it to the customer for their review, that's
Right.
when I send that email.
Okay.
Currently.
And that's
But
really smart.
like I said, we want to change it. We want to bring it in-house, but we haven't to do it yet.
No, and that's fine. But again, like it's showing, and again, how I say at the beginning, great, customer service. And this is why, because, you're putting in there, hey, here's the reminder, you guys have to do it, but here it is, instead of putting the onus on the client, right? Because the client,
at least
easily
they can't say you didn't tell us.
Exactly. You protected yourself. So if the client didn't read the email, that's on them. Or if they didn't read the engagement, that's on them. But I appreciate the fact that you're sending that extra email out. So I will wait for your email and not for my own email. So
Awesome.
yeah.
Well, no real questions today. Kind of shocking, but I'm glad you enjoyed that. Thanks for the comment, Karen.
Yes, and thank you, everybody. And again, my apologies for coming on just like literally right on time. And
hi, Jen.
Yeah. All right. Perfect. Well, thank you very much. Thank you, Jonathan. Thank you, everybody. And have a great rest of the month.
Excellent.
Okay, take care. Bye.
Bye.